anytime now on your screens, but it's kind of slow and it's a slow start, let's put it that way. Okay, it's more up than down, definitely, and some of the gainers and losers are on your screens now. So 50 odd points on the Nifty, 23, just under 23,300. Sribhi.
Okay, well, let's look at what's happening on individual movers and shakers. L&T, the market is actually looking through this margin issue because I guess the company's been guiding that it's sort itself out over the next couple of quarters. The order book intake is the one that the market is focused on, 3% higher on that stock. Tata Consumer's numbers are also being well received, almost 3% up there. There's some buying on Titan, up about 2%. Then some tech names come in. Wipro, Infosys, Tech Mahindra, these are stocks on the upside this morning. A little bit of pharma as well in the mix. Cipla, Dr. Reddy's having a good start to trade today. So that's largely on the upside of things. On the downside, the Bank Nifty, by the way, is decidedly lower already, 200 points lower on the Bank Nifty. Let's see what the individual constituents are doing. ICICI Bank about 0.5% lower, HDFC Bank 0.3% down, IndusInd, Kotak Mahindra, all of them down, but basically between 0.25% to about 0.5%. Other stocks that are lower are some of the metal and material stocks, JSW Steel, Tata Steel, Coal India. These are names on the lower side, even ONGC for that matter. So basically commodities are out of favor. Banks are looking slightly weak. It's consumer stocks all the way. Tata Consumer has now dethroned L&T to be the Nifty winner, 5% surge on Tata Consumer. But I guess even more earnings reactions and pretty big ones playing out in the mid-cap market, Rima.
Indeed. By the way, for Wipro, they won a multi-million-dollar deal from Etihad for IT transformation over a 5-year period, and that's pushing the stock up. But let's get to the mid-cap movers. On the way up, it's Navin Fluorine all the way, 7.5%. Early volumes are very, very high. Parag Milk, 4% up. There is a margin expansion for Parag Milk. And some of the other stock gainers include an Astral, again, earnings reaction. Biocon, the street was a bit disappointed with the margin performance, but the stock has opened up with strength. Ajanta Pharma, even Kalyan Jewellers, it's down 40% so far this year, but on the back of its numbers. And the company is also talking about debt repayment in the upcoming quarter. And Kalyan Jewellers has had a good start to the trading session. On the way down, you've got Concor under pressure. Again, here, margins have declined for the company. The overall EBITDA is down 10%. So Concor has down nearly 5%. So that's a big loser today. And Prestige Estates, we should get that stock up for you on your screen, 5% down. Bank of Baroda, Abhishek was telling us that it's been a subdued quarter. NIMs have contracted. Bank of Baroda is down nearly 3.5%. And OneSource Specialty, where there is an expected block deal of about 1,200 crore rupees, some supply pressure, perhaps. So OneSource is down nearly 2.5%. Some of the others, Waaree Energies, 12% up on Waaree Energies, again, reacting to numbers. Wokha, there is some announcement by the company on the exchanges. So that's pushed up the stock by nearly about 6.5%. Suzlon Energy has been having a couple of good days now. So Suzlon Energy is up and about in trade. And Whirlpool, another 5% gone on Whirlpool.
You know, the biggest volume-led gainer is Waaree Energy, right? 12% higher, and stocks at about 24.66 coming through there. I mean, actually, it's possible that for on the, I think, solar wafer imports, import duty, etc., tomorrow, perhaps in the budget. We'll have to see. But I read that as one of the sector-wise expectations, which anyway, this time around, they're quite low. Suzlon is at number 2 in terms of volume-led gains, is up about 4%. Got smashed on the way down, but coming up almost about 60 rupee levels. L&T continues to gain 4%. I think we mentioned that. Navin Fluorine, etc. Hitachi Energy is up another 5% after yesterday's 20% circuit move. You know, the question for many of these names, of course, is valuations for Hitachi Energy. And we discussed this yesterday as well. We got what Premier Energy, again, on the renewable space, 5% higher. Tata Consumer, 3.5% higher. Blue Jet, Biocon, Deepak Fertilizer, Walkhard, Astral. These are all between 2 and 4% up at this point in time. 2:1 in terms of advances to decline ratio. And we've got, I mean, you know, the first rates coming through. Prestige is a 5% cut. So that's kind of stands out. And KPIT is down about 2.5% as well. We had the management of KPIT with us yesterday. Stock was, of course, a big mover on the upside, but it's seeing some profit booking coming through now. Samir Arora is our market master today, founder and fund manager at Helios Capital. Samir, good morning. Great to have you with us here as always. Thank you very much.
Good morning.
Good morning. Good morning. I was in the morning, we were just chatting, and I was saying that I should keep expectations low. And my co-anchor Surabhi and Rima was saying that I'm being too philosophical. And, if we beat expectations, then the market will do well in any case. If it doesn't, then you're not too disappointed. How are you looking at it, Samir?
This we are talking about expectations every morning from the market or from the budget. So I have higher expectations every day from the market than I have from the budget. Every morning, I think now it should be okay. Yeah. So budget, the thing is, for whatever reason, whether it's discussion, pre-discussion, or these corporates meeting and then, making us feel in the past just because they made this representation as if that is about to happen. This time that discussion has also gone away. The chatter has gone away. So therefore, in that sense, yeah, there is no expectation. I agree.
It's actually so exciting for Samir, by the way, that Samir is reaching office. What time tomorrow, Samir?
Tomorrow is a holiday, so I don't come to office.
No, it's not a holiday.
It is a holiday.
No, it's not a holiday.
It is a holiday in Singapore, so I can see the same. I can see you guys from home.
I don't have
to.
Doesn't matter. Markets are...
We have, every time these guys, and I've been doing it for 20 and 30 years. In the olden days, when I was in Alliance, I used to fly to India for the budget and we would sit in a room. And I don't remember every episode, but literally every year we have lost money trying to trade that day.
But so Samir, and to that point, I still remember all our conversations last budget, July 24. So usse to acha hoga, because that's when 10% became 12.5%, right? So it can't be.
Interpretation.
Oh, okay.
I'm talking about my interpretation trading that day. Only in Feb 18, I got it perfectly right when the capital gains tax was increased. And that day, in our long short fund, we shorted nearly 20% index of the whole fund. Okay. So quite many hundreds of crores we shorted. That turned out to be all right. But broadly speaking, on these individual stocks, there is this allocation, that allocation, which I used to do more in the olden days, or railway, something has increased or something has increased. All that has been not 100%, 99% given up.
No, because those are budget day trades. So therefore, thank you for the candor.
Not work.
Exactly. So it's one day here and there, and then it fizzles out. But, coming down to...
Just to finish that point, it's on the day of the budget. Even if you're right, sometimes you're wrong. Because, you'll be right for the first half, and the second half,
it could be very different.
It'll turn, and it's happened so many times.
Yeah.
My best story is that I was in the CNBC office in Singapore on the day when this retrospective tax on ITC or whatever was introduced, and nobody knew about it. And I said, very good budget. And it actually was the worst budget we've ever seen, or at least in many, many years. Because we didn't know about that while the talk. And that's why you don't see me on budget day on TV. I come after budget.
No, but I remember, and you're being so candid, and we really, really appreciate that, and on live television. But must say, now to come back to the larger philosophical point, Prashant has been telling us to just keep expectations low. But I'm saying that in July, when capital gains tax was increased, the market had to deal with a real blow. At least no one's expecting, that kind of a shocker this time. If anything, market has got its hopes up again. I'm hearing people say lower STT because STT collections are now touching almost 45,000 crores. So on taxes, are you, hoping for or expecting anything realistically?
I'm expecting, but it may not be material. So I am thinking that since the chatter is there and it is logical that the government has given some incentive to the corporate sector through lower taxes in 2019, and they've done something for the lower this thing in terms of giving food and subsidy, and the states are giving, that you might do something for the middle class or for the taxpayer. And that also is coming now, but I've been saying it for the last 30, 40 days, that, there is some scope, maybe $4-5 billion, say 30, 40,000 crores. But if you divide that by number of people who may get it, say, I don't know, 2 crore or 3 crore taxpayers, it'll come to 8-10,000 rupees or something like that per annum. So you can get that much. I think it's possible to make it a little fair, and because the chatter and the people getting upset nowadays, at least on Twitter and others, which anyways middle class guys on Twitter, they are all feeling a bit upset in life. And I can see that because I am a lot on social media. Yeah.
No, why wouldn't they, Samir? Na? Because in the last budget, again, and to go back to that point, the super rich got a surcharge relief. Now the super rich can be in the new regime. 43% came down to 37%. Middle class, middle class didn't get anything. So maybe fair point. But Reema,
so that's what I'm expecting. But I was talking when we were talking that what do we do with it? Okay, suppose we know, suppose we think and it comes, then what are we supposed to do with it in terms of which stock to buy? We said we don't know. Therefore, we said, let's forget about trying to figure out, because even if you know this, what will you do tomorrow? Will you buy a consumer staple stock or will you buy Zomato? Because you are
will you? Will you if there is some sort of a reasonable relief to at the middle level? How would you not trade it that day, but in general, would you make any changes to the portfolio?
I don't think it will matter, because it's say, let us say in a family you're getting 600-700 rupees per month. Okay. Now, what will you do with it? Because inflation is there. Secondly, the basket of people have changed. Will they order one more time Zomato, or will they change or buy an extra lipstick? Who knows? Because in the olden days, these things were much simpler to do. Or maybe there'll be a telecom price hike after a few days and some of this money would have gone away or whatever, 600, 700, 300, 200, whatever. So the point is, you don't exactly know what to do if the amounts are otherwise small, and nowadays the basket is a bit wide. So you will say good and thank you and on behalf of everybody, and it'll help the consumer sector. But now which stock will they go to McDonald's more, where by the way I own that stock also, which has been a dud for 2-3 years, but before that was good. So will you go one more time to Westlife? Who knows? But
Samir, as a broader call for consumption, do you prefer staples or do you prefer discretionary stocks like the Trends and Nykas and Zomatos of the world?
I don't consider Zomato as a discretionary stock, in the sense it is just replacing what you were doing, which is why we like those kind of stocks where you are not trying to say that the customer has to spend more money. It is just reorienting. That's why we like the quick commerce. He's not spending extra money. He's just making it convenient for him to buy this via this channel versus that channel. I don't like the consumer staple, because I think that the consumer basket has expanded to beyond just upgrading a soap or something because monsoon has come, which was the old formula. In the old formula, when I was in Alliance Worli, we would see if there's rain outside our window in Bombay, and then you would go and buy levers and you'll make some 5-10% in 6 months. So those days are gone. Now you don't know. There are private labels. And then the customer himself or the consumer himself has or herself may want to buy something which they can show on social media or in a photograph or in a selfie. Some of these things, who knows? Big picture.
Those sound like simple. Those sound like simple days. Samir is saying you could watch the rain and then think that, okay.
Yeah, those days were great days. And that also in Bombay.
Easier to make money, and now it's too complicated. Don't even have to step out for a channel check.
Outside our office.
And then you buy a lever. Fantastic anecdote from the past, Prashant.
No, it used to. It used to be. It used to happen. I think even 10-15 years ago. But of course, not anymore. Samir, but what are the market looking like? Has the structure weakened a little bit? Are the go-go times behind us? What is your sense now? I mean, budget will come and go.
Market structure has become right now, this month. By the way, today morning I was saying that this month has been very strong. If you call this month the Chinese New Year month, because that was 2 days ago. Depends on what is this year. But this year, in terms of the calendar year of the Western world, has been tough because the companies doing badly have been penalized much more than you would normally expect. So if you are slightly off, they are down 8-10%. But over time, somehow we are not feeling negative in our bones, maybe because over time we have eliminated these stocks which used to have either very high leverage or some personal leverage or shares that were leveraged, or something where it was a government type stuff where, an order is not coming and so the guy is bleeding to death. But still, this has been a tough month. But somehow I'm not feeling that negative because, as I say, the world is doing well. And if the world is doing well, we are not such thorough idiots as a country that we will be negative when the world is positive. You may lag them, you may underperform them, but you are not supposed to have negative performance. That is not what I have seen for so long. And also, the flows still come. Even we, as a small mutual fund, still get flows. We even get flows in our PMS, in our AIF, in our offshore long short fund. This month, actually, we got more than 25 million in our offshore fund, which, normally don't get in a sort of a bad phase. But the world is not going to give up so easily because the world otherwise is happy in life. So they can be a little unhappy here or there and that.
No, absolutely. But is there a bit of a factor change in terms of what will do well from here, or you think it'll be the same? So, people were chasing high growth and ready to pay very high PE multiples. You think people will now, and one should look at slightly maybe steadier growth. You don't have to go for the...
So the point is, our formula always has been that we want both hands. We are not such dumb people that we can, in a country which is 1% of the world, say we will analyze only 30% of that market. So we have a few stocks which are of this high growth, like, say, the one which you're talking about, Policy Bazaar, growing, say, 40%, but has high valuation, but it looks that it can grow like this for long. And on the other hand, we'll also have these ICICI banks and HDFC banks and also these IT guys, which if they grow 2% instead of 1.8%, the stocks go up a lot. So I don't want the market to decide for me. I will have a mix. And maybe on the margin, you will say, okay, based on results, buy this more or that more. But I am not going to be a prisoner to the market that I only buy this and then I will wait 5 years for my turn to come. And then I will make a lot of money and outperform. And then again, the guys investing that day will be underperforming because they are coming when that cycle is doing the best. There is no need when you are managing a small country in the world where the rest of the world fund managers can invest in 40 countries and in 30 instruments and in debt and in commodities. And I, even within India, can't be at the simultaneously buying one Zomato and one HDFC bank.
Okay, so it's a buffet. So
package,
have a make a nice plate, which I think you've done. Samir, I don't think we can convince you to come to office tomorrow. You enjoy your holiday, watch us on TV. But Monday morning is when we speak
Monday
again.
morning, I'll see you. I would have analyzed all what your guests say.
Lovely.
Then I will conclude what I think.
Thank you very much.
Brilliant, and we look forward to that Monday call, Samir. You have a fun Saturday watching us on the sidelines. Thank you so much. Well, the topic at hand is really consumption and can the budget spur it or not. Our next guest is actually joining in to talk about the third quarter performance. We'll do that, but also talk about this big consumer issue. Tata Consumer is the company on the radar. Overall, the third quarter results were largely in line with expectations. International margins came in healthy, but there has been some pressure on the India business margin, and that's because of the rise in tea prices. To talk about this and more, we have with us Sunil D'Souza, Managing Director and CEO at Tata Consumer. Mr. D'Souza, thank you so much for joining in. We have so many questions on that margin pressure, on the outlook for the beverages business, etc., etc. But I want to start with something that the previous guest was just saying, considering it's all eyes on budget tomorrow, and the hope is that there'll be some relief in the form of, income tax changes. But some of the guests, what they've been telling us is that a small marginal relief of, say, even if it's 1,000 rupees per month at an average for an individual, does that materially change anything for consumer companies? Some of the market experts say perhaps not. But you are sort of running the business, so you tell us, will some sort of a small relief on income tax really improve demand for you?
So I wouldn't try to forecast, or I wouldn't try to make policy changes in a subject which is beyond me. But all I can say is, I think, and we had alluded to this last quarter, I think there is probably the high interest rates, slightly higher inflation, slightly lower government spending is impacting overall consumption in the economy. And any measure which goes to elevate that, we would welcome it. So from our perspective, I think we've delivered a decent Q3. If you see the volume growths across the place, in a very good place. India margins, as you rightly pointed out, under a bit of pressure, but that's primarily to do with tea prices. Tea prices have gone up about 25%, and we've only priced in about 40% of that. But remember, Tata Consumer, we are not playing for this month or this quarter. We're building a FMCG powerhouse of the future, and therefore we remain focused on building long-term competitive strength. We have grown, while there has been pressure on the margins, tea volumes have grown by 7%. And in salt, where we took a significant price increase, we've again grown volume. So we remain pretty confident of where we are. consumption boost would definitely help our business going forward.
No, absolutely. I mean, the volume growth has been pretty good. The revenue and top line growth for across the businesses has been pretty good. For Starbucks, it's 8% year on year. For the India Foods business, the growth is about 11%, I think, which is well along expected lines. But just to complete that point on volumes, how confident are you in terms of these levels sustaining? Because those who want to nitpick, though, I mean, the stock's doing really well today. The market loves the numbers. But there are those who will say that perhaps the expectations were running even higher, specifically from, some of the newer businesses, some of the recent acquisitions. So on volumes, what can you guide as we step into the new fiscal?
So our guidance doesn't change from a mid to longer term. We've always maintained salt and tea to be growing mid-single digits and a couple of basis points on pricing. Our growth businesses, which includes the organic businesses that we had getting into last quarter of Soulful, Nourishco, and Sampann, we had guided for 30% growth. And with the Capital Foods, that's Ching's, as well as Organic India coming in, we have said medium term also growth businesses will grow 30% and contribute to 30% of the portfolio. So we remain pretty confident of that. And there is a bunch of reasons for that, because we've done some basic work. My distribution at the front end has expanded significantly. We've got roughly 30% more feet on street with split routes to give focus. A. B, we've strengthened our logistics at the back end and digitized to a large extent with the auto replenishment system, permanent dispatch plan. We've got a new front end app for the sales team. We've focused on the channels where the consumer is moving. E-commerce has been growing at 59% for us, and it's now larger than modern trade. Quick commerce is 50% of that business. That's where the consumer is going, and we are there. Innovation has been firing for us on all cylinders. So all in all, I think we're in a pretty good wicket.
That's very interesting to hear that e-commerce is now a bigger channel than general trade for you. And this is, telling us about the times that we're in.
Indeed. Mr. D'Souza, just getting back to the earlier point about tea prices and the fact that they've gone up 25%. You're saying you've only accounted for 40% of the tea price hike so far. And what does that mean in terms of just margins for the near term, say Q4?
See, overall, if you looked at Tata Consumer EBITDA margins, we were down by 210 bips. Almost all of that I can attribute to the pressure on tea prices. Tea prices, because of the two droughts and therefore the supply-demand equation going out of whack, went up by about 25%. Overall, we take price hikes calibrated to make sure while we are trying to recover margins, we are not losing competitiveness. So we've done that. And therefore, we've recovered only about 40% of the tea price hikes. And not all of it has flowed in last quarter, because we've been taking consistently and will continue to take price hikes to try and mitigate that. But remember, tea is also a cyclical commodity. Starting March, April, the new crop will start to come in. And when the crop starts to come in, assuming that the crop is good, we will have hopefully an increase in margins. Or if the crop is not good, industry will start taking price increases to mitigate that entire piece. So from that perspective, I would say the pressure on margins is a short-term perspective. We remain focused on growing the business for the longer term. So while there was pressure on margins, we have managed to grow tea volumes by 7% and value by 10%. So I think we will react to pricing, to costs, and make sure that we take calibrated price so that we're not giving a shock to the consumer. We're gradually taking it up.
So do you think in Q4 also, because you are taking a calibrated approach to price hike, margins will come under pressure compared to Q3 levels? Is that the possibility?
So the heavy lifting of the pressure, I think, has happened in Q3. Starting Q4, remember in Q4, there is hardly any tea plucking in North India, and therefore there is no supply coming in. So we have inventory sitting in at a certain price. We will take calibrated price increases apart from the increases of the last quarter flowing in. So margin profile will become slightly better, but will remain under pressure from a longer term normative where it should be. I think middle of Q1 to about middle of Q2 is when you will start seeing the tea margins coming back.
Mr. D'Souza, hi, good morning. Ching's and Organic India, the run rate is at about 850 crores for the 9-month period. Could you give us a sense of what we're looking at for this portfolio for growth in FY26?
So overall, like we said, the growth businesses for us will contribute 30% and grow at 30%. So Ching's and Organic India is part of that. Remember, we bought this business with a very clear business case, which stated that we can grow the business faster than the original owners and more profitably. The more profitably piece, I think, has already happened because we've taken out significant costs. And if I don't add the amortization that we do, we're significantly ahead of where the businesses were with the prior owner. So from that perspective, we are in a good place on structurally. So I think we've taken about a couple of quarters to understand the businesses. They're slightly different from what we operated. Ching's, for example, is processed foods, value-added products. The frequency of buying is different. The commodities that go into it are different. There is a significant export business, which we took time to understand and build. Organic India, there is a huge supplement portfolio which is not distributed in India. In the US, it is the Amazon process which we've got to build. So we had a bit of learning, a couple of quarters. The good part is this quarter, the business has stabilized. While Ching's has grown marginally, Organic India is more or less there. We do expect acceleration starting Q4. Also, adding to the fact that we had committed that we will start a food service distribution to take advantage of Ching's, and we will start a pharma distribution to scale up Organic India. For both these, we ran pilots. We ran pilots in 2 cities for food service, which we now already starting to expand to 16 cities. And for pharma, we ran a pilot in 10 cities, which was fantastic results. And we're now expanding to 40 cities. So innovation will come in, distribution will start expanding to newer channels. We've understood the categories better. Brand building. You would have seen the new Kurkure Ching's product out there in the market. That gives us a fantastic sampling platform. I mean,
right. Right. And just 30 seconds, any new, any more acquisitions, any new categories?
So in our new strategic profile that we've...
Go on, sir, go on. We can hear you.
Yeah. So from a strategic perspective, we've sort of tweaked the pillars for strategy for us. And one of the pillars is focus on new businesses. So apart from digesting and creating value in Capital Foods and Organic India, we remain focused on looking at opportunities that there are in the market. While in the short term, we will focus on delivering value against what we have already acquired. Going forward, we remain open to organic as well as inorganic growth.
All right. We leave it there, Mr. D'Souza. Thank you very much for your time. Pleasure, good luck, and speak to you soon again. Thank you. Well, we'll take a quick commercial break here. 70 points higher on the Nifty. And look at Hitachi India Go. I think 20%. The recent low on Hitachi was 8,800 rupees. It's at almost 14,000 now in 3 days flat. So that is a powerful, powerful rebound coming through. Take a break. See you on the other side. We'll have the management of Max Healthcare and Prestige Estates to talk to us about numbers and the outlook. Okay, welcome back. Lots happening in the market in terms of single stocks, and it's another 100 points on the Nifty. So, which means from Tuesday's low, the Nifty is up almost 500 points now. But this is still the first hour today. Max Healthcare is the next company which is with us now. Reported a strong set. Revenues and profit after tax came in strong, but average revenue per occupied bed has been slightly subdued. Let's talk about this and more with Abhay Soi, Chairman and Managing Director at the company. Abhay, good morning. Great to have you with us here on CNBC-TV18. As always, Prashant here. So let's just start with that RPOP question. Slightly subdued, I guess, new units responsible. Not exactly bad news for patients, but as an investor, I've got to ask this. What was behind it, and what are you seeing from here?
So, we've had, in the existing units, we've had 8% growth of RPOP, which is in line with what has been in the past as well. So, no complaints over there. Whilst the new units, and, you're aware that we acquired 3 new units and we started a new greenfield venture. So, there are 4 more units that we started last year. And all of those, obviously, initially are going to have play on lower RPOPs. And that is what has dragged the overall RPOP down. So like I said, I think, that's exactly why we bought them. That's exactly where the opportunity was. Although there's been an increase in EBITDA, we've more than doubled EBITDA in the last 9 months, even on a Q-on-Q, on a year-on-year basis for this present quarter. There's been an increase of 94% on EBITDA in the Lucknow unit, as well as 25% on the Nagpur unit. Besides, we've broken even in a space of 6 months, for the Dwarka unit. But, they've obviously dragged down the overall RPOP. Having said that, we still had an EBITDA increase of 32%. So I think that's the positive takeaway from this.
Dwarka, what is the what's the picture looking like specifically for that one?
Specifically for Dwarka?
Yes, Dwarka. I think that's the last one which came up, right? After Lucknow and Nagpur, which came on earlier.
Well, the last one has been the acquisition of JP Hospital, which happened in October. So that's too early to call. I have no doubts that JP will go the same way as Lucknow and Nagpur have. We've had great success over there. Dwarka, which we started in July, typically, and that's a greenfield. Typically, a greenfield takes about, as you're aware, 18 months to 2 years to sort of break even on EBITDA. We've broken even in the month of December. So that's within 6 months. Of course, the quarterly loss for it was 5 crores because the month of October and November was sort of still on ramp-up stage. But in December, we broke even. And, we believe it's only going to go stronger from here.
All right. Abhay, hi. Good to have you on the show. Speaking about the new facilities and the expansion, I just have a question on, Thane as well as Punjab. Thane as well, I think it's a 500-bed facility that you're setting up. You're adding more beds in Punjab as well. So all things put together, how much will you be spending on CapEx? This year is almost ending. I'm not sure. Some of this perhaps runs into the first quarter of next year. And how do you manage the balance between debt and cash? Our colleague who tracks the company was telling us that the debt is around 1,600 crores right now. So how are you funding this expansion?
So both these are built to suit. That means we have local partners who will be developing, who have the land, who will be making the land and building, and will be leasing it to us. There is no capex towards land and building. Eventually, we will be contributing in terms of the medical equipment over there. And of course, a basic deposit to tie in the lease. So these are leased assets. These are built to suit. Commercial real estate leases normally run at 8 to 9% cap yields, whereas our ROCs are 35% and northwards. So you can imagine we've leased it at those sort of commercial values and enjoy higher ROCs without any capital expenditure towards them. There won't be any capex towards these 2 facilities over the next, till they get occupation certificate and whatever else.
Oh, okay. So that's good. And by when do they start contributing? What are the timelines for Thane? Dwarka, like you're saying, is already break even. So when do you expect to see higher occupancies and maybe higher RPOB in Dwarka? And also with Thane and Punjab, how many months or how many quarters before they start contributing to the top line?
Well, these are greenfields, both of them. So these are asset-light greenfields that we've entered into. Thane should take about 3 years for construction. and Mohali, Punjab, Zirakpur should take another 24 to 30 months for construction. So it's and like I said, during this course, it's asset-light model. There is no contribution from our side. It's the developer who invests in the land and building.
Right. What about Max Lab and Max at Home? We have the current quarter's revenue, but how would you be scaling that up? Say by the end of FY26, what would the quarterly run rate look like for both of them?
Well, both we've been, generating, we've been growing at a CAGR of 24-25%, for past many years now. And I think that trend should continue unless we were to look at some inorganic growth opportunities over there. Max at Home, unfortunately, is the largest home care business in India. It's perhaps the only profitable one in India. So there are very far and few opportunities to acquire. So it will be organic growth. But as far as the diagnostic is concerned, if we get decent bolt-on acquisitions, then we could consider them on a case-to-case basis. But, sans that as well, it's been growing at a 24-25% CAGR. And we believe that should be the run rate going forward as well.
Got it. Abhay, I remember sometime last year when we spoke, you said FY26 will be an explosive growth year. We're closer to 26 now. So looking very strong, super strong?
Looking super strong. We are looking at, commissioning 3 of our brownfields in the first quarter itself. April, May, June, we will have 268 beds in Nanavati, Mumbai, which are getting commissioned. We have 400 beds at Saket in Delhi, which get commissioned, and 155 beds in Mohali. And brownfields have a very good amount of operating leverage, so they contribute almost immediately to both the top line as well as bottom line. Followed by December in 26, where we should be commissioning our semi-brownfield, which is in Gurgaon, which is another 500 beds. So we have a very exciting year ahead. We've grown at revenue's grown by 34-35% this quarter. EBITDA has grown by 32% this quarter. We are now entering a strong quarter, which is the Q4, which is typically the strongest quarter of the year. So we believe and we hope this trend continues. And then by quarter 1 next year, you'll have all of these new sort of brownfields kick in. So I think I'm looking forward to a very good 6.
How many beds in total, Abhay, in FY26 between the first quarter and then December?
So I think collectively we should be looking at about 14 to 1500 beds.
And Abhay, the margin profile, because as you explained, a lot of operating leverage will kick in. These are brownfield expansions. So the margin improvement that we can expect, say, by the end of first quarter, FY26?
Well, by the second quarter, I think, in the first quarter, while it's still opening, you'll have ramp up. So you'll have, you may have static margins in the first quarter, but yeah, definitely improvements thereafter. So, I have no doubts on that front.
Okay. Thank you. Thank you very much for joining in. That's the word coming in on Max Healthcare. Moving on now to Prestige Estates. Now, they reported a muted Q3. The company's sales have fallen by 43%. Irfan Razak, Chairman and Managing Director of the company, is now with us on the show. Thank you very much for joining in. So in the first 9 months, you've managed sales of about 10,000 crore rupees. But when we last spoke, you had guided for sales of 25,000 crore for the full year, which means if you want to achieve that guidance, in Q4, you need to do 15,000 crore. Do you think it's possible, or are you looking to lower your full year guidance on sales?
Good morning. Yes, we have done 10,000 crores, which is the positive. And I believe that we have 5 projects that are waiting for all regulatory approvals like RERA and other things. And there are 5 different cities, that is Bangalore, Chennai, Hyderabad, as well as in Mumbai and NCR. Now, once these RERA approvals come in, RERA numbers are granted, I don't see any reason why we cannot cross that number which we have guided. The good news is all these projects are approved by the authorities. It's only the last mile RERA number that needs to come. And it's imminent, and I think it's come. The demand is there. We get that traction. We get the feel from the market that people are very keen to invest and buy their homes in these projects. So I think we should cross this. And the only disclaimer is, in case these RERA numbers get delayed by a couple of weeks, then it'll just spill over to the next quarter.
What's the combined potential of these 5 projects for which the RERA approval is imminent?
See, we have starting, if you'd like to know the total number, it's there. But then if you ask me, there's 52,000 crores worth of value of inventory that can come in once the approvals and the RERA comes in. But out of this, if I take a breakup, it's about 5,000 in Bangalore, it is 5,000 in Mumbai, it is about 10,000 in NCR, and 3,000 in Chennai, and another 3,000 in Hyderabad. So this is the sum total of this that will be launched in as soon as we get these RERA approvals. And there is demand. The customers are pretty keen. In fact, it's like a pent-up demand that is there. Of course, physically, we should be able to do, and pretty much our experiences when we do a launch, at least 30 to 40% is sold off the shelf almost immediately. So we are hoping that this will happen in the sense that the regulatory comes in. We are in an environment where we have to have that discipline, and I'm very happy that discipline is there. And I think we should be able to work towards it.
Mr. Razak, good morning. Prashant here. Good to see you. So this is, so the numbers the breakup adds up to about 27,000 crores. That is your share from the saleable. Yes. Okay. That 52,000 crores is the total kind of project value. Okay.
50,000 is many more other projects, but this is what is imminent, which can happen in this quarter, in the current quarter.
Okay, and there's no real slowdown in RERA approvals, and that's, I mean, or is it running a little slow generally for everyone, or not really?
You cannot say. See, now we have authorities. We have the first of all, it's the approving authority. Then you have also the RERA authority. Now each one, every state has their own method of working. But I believe discipline is required, and I think we should not regret that. It's only that a lot more effort is required, and unlike in the past, you can't bring the product to the market till you have registered and got the RERA number allotted to you. And we are hopeful that it'll get done, and very soon. That's the good news.
In Karnataka, Bangalore, that e-Khata system, all that is stabilized now, right? Things are.
Yes, it has. See, any change always has its stress, but I think the change is for the better, and e-Khata just brings in that much more discipline again. For change over from one system to the other, to get people to get used to it, including the authorities, it takes time, but I think it's stabilized now.
There is no slowdown in demand, in your opinion, right? You're not sensing any of that at all. Inquiries, etc., remain super strong. We've heard from some mid-tier developers out of NCR that the velocity has slowed down. It could be maybe a one quarter, 2 quarter thing, but are you sensing anything?
Not really. I think the demand is quite good. Unless the pricing goes up too high, that's where we are very conscious. We are trying to bring the product at a fairly acceptable price. At the same time, seeing that the bottom line for the company is also properly protected. And I think the demand is there. And I believe the demand is there because we can sense the demand. Because people are reaching out to us that they want to buy, they want to invest. And then unfortunately, we can't really accept even a single rupee or even advertise till the product is, the RERA numbers are allotted.
Out of time, Mr. Razak, but thank you very much for joining in. That's prestige for the markets. It's now inching towards 23,400, and the Tata Group stocks are on fire. It's Trent right on top, followed by Tata Consumer, 3.5%, Titan, Tata Steel, all showing you some solid gains. So it's a good market. Mid-cap index is up nearly 1%. Get into a break. On the other side, we'll talk tax. Akhil Chandna of Grant Thornton and Akhilesh Ranjan of Price PwC will join in to talk about in detail their direct tax expectations from the budget.
Welcome back. It's all eyes on the union budget as Finance Minister Nirmala Sitharaman gets set to present the document in the floor of the House tomorrow. Now, there's been a lot of chatter and speculation about potential tax changes, specifically on the income tax side, personal income tax, to give some relief and boost consumption. Well, what are the key tax expectations in terms of direct taxes? To discuss this, we have with us Akhil Chandana, partner direct tax at Grant Thornton. And we also have Akhilesh Ranjan, advisor tax policy, PricewaterhouseCoopers, and of course, the former member of the Central Board of Direct Taxes. Gentlemen, thank you very much for joining in. Good to have both of you on. Mr. Ranjan, I want to start with you. In your earlier avatar, you would have heard such clamor, so often, and the request for relief, right? And I think the clamor and the noises are a little louder this time, because companies have been telling us that indeed there is a slowdown in urban India, and this slowdown in urban demand, perhaps not too many people saw it coming. So what do you have to say about this huge expectation of a relief in income tax?
Yes, good morning, and thanks for having me here. Certainly, yes, there is a lot of clamor and a lot of noise about the distress in various parts of the population. There are, of course, economic concerns. I think the concerns on private investment, the concerns on skill upgradation, on employment, job creation, a whole lot of things. But it's quite refreshing to see the focus on the middle class this time. This is a class which I think very important, not just because of the numbers in the population, but because it really contributes, or it can contribute tremendously to economic growth. It is also the repository of talent, which is, I think, something we need for long-term sustained growth. So the noise is good. The discussion is nice. Let's see what ultimately comes out. What are the constraints of the government? Coming to the tax structure, I think I would talk essentially about the so-called middle class as far as direct tax is concerned, which would be people earning between 5 lakhs and 25 lakhs. In my view, that is the class to be seen. This class covers about more than 3.5 crore of taxpayers, and this is, I think, the main backbone of the tax collection system. Now, there have been some attempts made, and in fact, a lot of attempts made to give relief to the lower part of this lower segment of the middle class, people earning up to 10 lakhs. I think that's quite fair enough at the moment. You don't pay tax up to 7 lakhs. You pay just 50,000 rupees if you have 10 lakhs. I don't think it can get better than that. But it is the portion of the segment which is between 10 and 25, which is the problem area, I think. And it's not just the question of giving relief, but also of rectifying the structure. So I think, yeah.
No, absolutely, sir. And I mean, that segment up to 10 lakhs was given relief even in the July budget in the new tax regime with certain tax slab changes. And, there's the overall sweetener of higher deduction. But I have a slightly more sort of philosophical question on tax policy, or rather tax philosophy. And I want both of you to weigh in on this. And if I could take our viewers also back in time, because 2019 is when the government decided to move forward and, cut the corporate tax rate. And that was a radical move and radical reform at that point in time. Akhil, now come in on what has happened since then, because I think the whole the stance the government has always taken is to stimulate the economy, stimulate corporate India, lower taxes, spend on, even on government capex, and hope for all of that, the benefits of that to percolate down to the consuming class. Do you think that will continue to be the view of the government, even if we might be an interim short-term consumption slowdown? Akhil?
So I think Mr. Ranjan has clearly laid down that for middle class, the expectations are to lower the tax rates. And recently, we've done a survey at a GT Bharat where, more than 500 respondents, especially from a personal taxpayers, they've responded. And the overall theme is on the similar lines, that out of 500 people, 57% of the people feel that the tax rates are still higher. Though the government has been continuously giving some kind of reliefs, but they believe the tax rates are still higher. That should be reduced, and even some exemptions should be bring in. Though the theme is to move to the new tax regime, and we've seen in the last year that 72% of the people, like more than 5 crore, if I see the numbers in front of me, more than 5.27 crore people have filed their tax returns under the new tax regime. But still, they believe that to make it more attractive, we need to bring more exemptions and deductions, available under the new tax regime. And that's the overall theme which has been coming from the survey or otherwise also, that people are looking for simplification of tax compliances, especially NRIs, if you ask me, lower tax rates, and more deductions and exemptions, be it standard deductions or or the benefits given under the loss from property and all. So those are the overall themes which we have to see tomorrow what the government has to offer.
Sure. Yeah. Absolutely. Mr. Ranjan, if I could come to you with that same question, thematically speaking, it's been all about triggering the animal spirits in corporate India, and also stepping up public capex, and then hoping for those benefits to trickle in. Whether you see a change in that approach at all. And, then let's bring in the other segment as well. On the corporate side, of course, there's a big ask to come back with the concessional rate of tax for new manufacturing companies. If you see, that could be a possibility, or anything else. So you've discussed on personal income tax, there is need for, some changes maybe in the 10 to 25 lakh bracket. What about the other side?
So I think the corporate tax reduction was something which it was a good policy move. The rate of 25 is something which makes the Indian economy quite competitive. The only problem was that it was not accompanied at the same time by personal income tax reforms. We had submitted a report in 2019 in August at the task force, which was headed by me, and the corporate tax was part of it, which has been implemented. The personal income tax also needs a rejig, in fact, to make the whole thing become cohesive. There has to be some, you can't have a situation where a corporate pays 25% tax on a huge profit, but the salaried individual with 15 lakhs pays 30% tax. That is something which should be rectified, and I hope something is done about it this time. The middle class is also, is important because, there is this theory of marginal propensity to consume. A small reduction in the tax liability for the middle class really translates into a higher spending in consumption. So I hope all hopes for that. As far as corporates are concerned, as I said, the tax rates are reasonable and moderate. There are other concerns out there. There are concerns of tax certainty, of litigation, concerns which are bordering around how can the government incentivize manufacturing. The last time we had the concessional rate, it didn't really take off probably because there were so many other concerns or other risks that the investors feel that they're in the economy. I think it has to be a coordinated approach, maybe go back to a slightly concessional regime, modified regime, but with a host of other things like low-cost credit, things on skill upgradation, encouraging startups and entrepreneurs. I think those are the things which should be done if we are really looking at sustained and high growth over the next several years, which I think is what India really needs.
Okay, gentlemen, very quickly, coming now to market-linked taxation, where obviously capital gains is the big talking point. Akhil, quickly, in brief, are you expecting anything else? Any further clarification? I'm not even going into another hike or another cut, but anything more if you would expect on capital gains tax and specifically on STT?
I think before I come to the capital gain, just to add what Mr. Ranjan has said on the corporate tax, I think 15% though has been given to domestic manufacturing companies up till 2024. I think the expectation is that 15% should increase. With the years, the benefit should increase and even extend to more other than domestic companies to GCCs and all. And there's a buyback, of shares. That addressing taxation on that is very much expected by the people. They can come up with, I think everyone knows what the expectations are there. Now coming to capital gain, I don't see, any change happening. But if you ask me, I think people are expecting that old capital gain tax regime should be brought in. And even for that matter, STT, if the capital gain continues like this, the STT should not be charged. But let's see what's there tomorrow.
Okay, finally, to wrap it up, just 30 seconds left, Mr. Ranjan. You've been the man on the inside as well in your earlier avatar. So in 30 seconds, if you were to sum up, what could be the likely realistic expectations on the direct tax front tomorrow? What would they be? The top one or two, perhaps.
I think there will be some relief for the middle class, but that may not be to the extent that one would hope for, essentially because of the constraints of the government. I think they will stick to the fiscal deficit of 4.5%, and then therefore that leaves less of leg room to any major changes. But that change should be there, and look at and see what the corporate sector really needs. I think it's not just the high-income corporate group, but the MSMEs, which need a lot of attention. And I think that the government is alive to that concern. I hope to see a lot of changes for the benefit of the MSMEs. So on both counts, I think there should be some changes for the better for all sections. On the capital markets, I don't think there'll be a change, and I don't think there should be a change. Things are fine. We have just changed the capital gain structure. Should let it settle down before making any further changes.
Got it. So the finance minister has a tough ask ahead of her, right? A please all budget. Can she really deliver that tomorrow and please all sections equally? Thank you very much, gentlemen, for weighing in on the likely big tax expectations. We do have to take a very quick break on that note. On the other side, Lata joins in and she will be in conversation with Debabrata Chand of Bank of Baroda to talk about the third quarter earnings fine print.
Welcome back, and we are coming back to earnings analysis. Bank of Baroda posted a good set of numbers. You can't complain. The asset quality has improved considerably, and the advances and deposits growth at about nearly 12% each is fairly decent compared to most other banks, especially public sector banks. The problem for the market is really the NIMs. The net interest margin is not climbing above the 3% mark for the bank as a whole. And that's pulling down the profit growth as well, as you will see in just a minute. Let's invite the management. We have with us Mr. Debabrata Chand, the Managing Director and CEO of Bank of Baroda. Good morning, Mr. Chand. Thank you very much for sparing time for us. Appreciate it. For starters, if you can tell us the NIM problem. I mean, I'm starting with the negative because that's the only thing investors are worried about. They're happy with everything else. The net interest margin, is it large? Is it that your cost of funds has gone up? Is it showing any signs of plateauing?
So thanks, Lata, for inviting me. And the fact of the matter is that the bank is very consistent in terms of whether it is a top line, bottom line, asset quality. The profitability has been very consistent for the last 8 quarters, so as the ROA. As far as the margin is concerned, let us be very clear that there is an underlying market where there is a cost of deposit, it's still elevated, right? A scenario where the cost of deposit is elevated, we had a guidance earlier from 3.10 to 3.20. But in between, there was an accounting change in terms of the penal interest and penal charges also that impacted the NIM by almost 5 to 6 bps. Having said so, if you look at the 9 months NIM, it is at 3.08, which is marginally lower than the guidance we had given of 3.10. So looking at a Q3, something slightly lower at 3, but we are hopeful that for the full year, we'll be maintaining the margin at 3 to 3.10. It's quite natural in a market wherein if there is a elevated cost of fund, the deposit market is tight, the margin would slightly get squeezed. But a scenario where the margin is squeezed, again, we're able to optimize the ROA. The net interest income has been very strong. So it's a combination of multiple factors. We have been very consistent in terms of the growth profit. The 9 months profit has been almost up by 12.6%. The top line is growing at almost 12%. So these are very consistent, stable. That is what is sustainability is key important part of the profitability, not the margin per se for a particular quarter.
Okay. No, I take your point that it so much depends also on how you deploy funds, and you have had a very big retail deployment, which must have given you a higher yield, higher return on the funds deployed. Higher retail gives the fears of unsecured debt. What is the percentage, and are you noticing any signs of trouble? What is the NPA in the unsecured credit itself?
So that's a very fair point. If you look at my retail growth, we are consistent almost 20% for last many quarters, 8, 9, 10 quarters now. Having said so, we have also said earlier that the focus continue to be on the secured part of the retail. The loan in the mortgage loan, the housing is growing almost at 17%. The auto is growing at almost 17%. So we are not focusing on secured personal as a growth lever in terms of the retail loan. The book as on today is almost 30,000 crore. And the GNP on the unsecured personal loan is almost like 3%. And if I talk about the retail GNP, it's something around 1.6%. So the levels are much, much lower in terms of the overall slippage. As saying so, we said earlier, actually, rather, we're the only, the bank to say in June 2023 that we're going to moderate on the unsecured personal loan. At that time, the growth almost used to be 80 to 100%, but now the growth is almost 24%. And in between, we have strengthened a lot of underwriting standard quality, the model and everything. So we're quite comfortable growing at 25-30%. And the book is not giving any kind of elevated slippage for us to slightly be concerned about that. We're quite comfortable with the retail growth of 20%, and primarily the focus continue to be on the mortgage side rather than the unsecured personal.
Okay. Can you give us some guidance on what's the loan growth expected overall, retail?
See, going forward, we said that fully we are targeting a loan growth of 11 to 13%. Rather, we'll try to operate at the upper band. That means I'm talking about 13%. Within that, the retail continue to be at 20%. The agri MSME would grow at 14%. And the corporate would grow at 10% for the full year. So maybe, the total can be around 13 or slightly marginally higher than 13% for the full year.
Okay. Okay. You'll be able to bring down your loan deposit ratio in that case? Will advances, what I mean is, will deposits also grow as good?
So that is what actually, we had given a guidance last time, rather we revised the guidance 1% lower last quarter. And we said the deposit growth would be 9 to 11%, right? And the current quarter growth is 11.78%. So the guidance on the deposit continue to be 9 to 11%. So we operate at the upper band, let's say 11% deposit growth and 13% advance growth. My LDR, the CD ratio continue to be at 84.
Okay.
So
Mr. Chand,
there is nothing.
I will have to interrupt you because the Prime Minister is speaking ahead of the budget session. Please hold on. We have to listen in.
बजट सत्र के प्रारंभ में मैं समृद्धि की देवी मां लक्ष्मी को प्रणाम करता हूं। और ऐसे अवसर पर सदियों से हमारे यहां मां लक्ष्मी का पुण्य स्मरण किया जाता है। सिद्धि बुद्धि प्रदे देवी, सिद्धि बुद्धि प्रदे देवी, भुक्ति मुक्ति प्रदायिनी, भुक्ति मुक्ति प्रदायिनी, मंत्र मूर्ते सदा देवी, मंत्र मूर्ते सदा देवी, महालक्ष्मी नमोस्तुते, महालक्ष्मी नमोस्तुते। मां लक्ष्मी हमें सिद्धि और विवेक देती है, समृद्धि और कल्याण भी देती है। मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। साथियों, हमारे गणतंत्र के 75 वर्ष पूरे हुए हैं। और ये हर देशवासी के लिए सर्वाधिक गौरवपूर्ण है और विश्व के लोकतांत्रिक जगत के लिए भी भारत का ये सामर्थ्य अपनी एक विशेष स्थान बनाता है। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है। और मैं विश्वास से कह सकता हूं कि 2047 जब आजादी के 100 साल होंगे, विकसित भारत का जो संकल्प देश ने लिया है, यह बजट सत्र, ये बजट एक नया विश्वास पैदा करेगा, नई ऊर्जा देगा कि देश जब आजादी के 100 साल मनाएगा तब विकसित होकर रहेगा। 140 करोड़ देशवासी अपने सामूहिक प्रयास से इस संकल्प को परिपूर्ण करेंगे। तीसरे टर्म में हम मिशन मोड में देश को सर्वांगीण विकास की दिशा में, चाहे वो भौगोलिक रूप से हो, सामाजिक रूप से हो या आर्थिक भिन्न भिन्न स्तर के संदर्भ में हो, हम सर्वांगीण विकास के संकल्प को लेकर के मिशन मोड में आगे बढ़ते जा रहे हैं। इनोवेशन, इंक्लूजन और इन्वेस्टमेंट, ये लगातार हमारे आर्थिक गतिविधि के रोड मैप का आधार रहा है। इस सत्र में हमेशा की तरह कई ऐतिहासिक बिल पर संसद को चर्चा होगी और व्यापक मंथन के साथ वो राष्ट्र की ताकत बढ़ाने का काम करने वाला कानून बनेंगे। विशेषकर नारी शक्ति के गौरव को पुनः प्रस्थापित करना, पंथ संप्रदाय के भेद से मुक्त होकर के हर नारी को सम्मानपूर्ण जीवन मिले, उसको भी समान अधिकार मिले, उस दिशा में इस सत्र में कई महत्वपूर्ण निर्णय लिए जाएंगे। रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म, जब विकास की तेज गति को प्राप्त करना होता है तो सबसे ज्यादा बल रिफॉर्म पर रहता है। राज्य और केंद्र सरकार ने मिलकर के परफॉर्म करना होता है और जन भागीदारी से हम ट्रांसफॉर्मेशन देख सकते हैं। हमारा युवा देश है, युवा शक्ति है, और आज जो 20-25 साल की आयु के नौजवान है, जब वो 45-50 साल के होंगे तब वो विकसित भारत का सबसे बड़े बेनिफिशियरी होने वाले हैं। उम्र के उस पड़ाव पे होंगे, नीति निर्धारण की व्यवस्थाओं में उस जगह पे बैठे होंगे कि वे गर्व के साथ आजादी के बाद जो शताब्दी शुरू होगी, एक विकसित भारत के साथ आगे बढ़ेंगे। और इसलिए ये विकसित भारत के संकल्प की पूर्ति का प्रयास, ये अथाग मेहनत, आज जो हमारे टीनेजर्स हैं, हमारी युवा पीढ़ी है, उनके लिए ये एक बहुत बड़ा तोहफा बनने वाली है। जो लोग 1930 में, 42 में आजादी के जंग में जुट गए थे, पूरी देश की युवा पीढ़ी खप गई थी आजादी के जंग में, और उसके फल 25 साल के बाद जो पीढ़ी आई उसको नसीब हुए। उस जंग में जो नौजवान थे उनको नसीब हुए। आजादी के पूर्व के वो 25 साल आजादी के जश्न मनाने का अवसर बना। वैसे ही ये 25 वर्ष समृद्ध भारत, विकसित भारत, ये संकल्प